Hey everyone, Vincent Wynn here for Tip Line. Hope everyone's having a great weekend. Before I get started, just want you to remember that I am not a financial advisor, nor am I giving you financial advice. So this is just my TA and interpretation of what the charts are telling me. With that, today our focus is on FNGR, finger motion. Okay, as usual, we'll start on the day chart normally, but today I want to take a look at the weekly really quick here. What is happening with the weekly? So the prior week, not last week, but the week before, um, finger motion, the 20 SMA crossed above the 200, which is quite bullish, as you can see here. My only concern is now that price has moved away quite a bit from the 20 and the 200 and the 50. It concerns me a little bit in a sense that it is going to have to retrace at some point. As you can see back here during this run up, price went away from the 20 quite a bit, and then it had to retrace. And this is weeks, so this period took quite a bit for it to retrace back down. I'm not saying that that's going to happen anytime soon, but I am saying that that is something I am looking at. Okay. All right. So before I jump too far down the rabbit hole, I want to say that I'm not a fundamental trader. I don't trade based on fundamentals, especially when it comes to stocks like FNGR, AMC, GTI, MMTLP. Well, that's gone now. MMAT. All these meme stocks, or as you know, are heavily traded by retail, and I don't. It's not that I don't trust retail traders. I don't trust the hedge funds, smart monies, all the big players because they can come in and manipulate the stock quite easily. So you can have a great earnings and the stock will tank. We've seen that time and time and time and time and time and time and time again, right? So when the stock has such a low volume and it's heavily manipulated and it's heavily traded by retail, sure, throw out a good statement, fundamental earnings, whatever. For me, I'm going to tell you right now, I don't give a rat's ass. If fundamental is important to you, go to another YouTuber. I'm sure there are those out there that swear by it, not me. What I will swear by are the charts. They don't lie. They could be delayed, or they could be too fast or too late or later. Um, that can happen, but ultimately, to me, charts always follow through. Okay, all right, done with that little spiel. So the reason I'm jumping back on FNGR is something I saw last night. It was so early in the morning when I did the wrap up of the five stocks. If you haven't seen it, make sure you click on the link above here. I saw something that formed and out of the corner of my eye on the day chart, and I was too tired to get into it because it requires more explanation that I just couldn't muster up the energy to do. So before I get into that potential pattern, I want to revisit the existing pattern, the existing bearish pattern. Okay. So the existing bearish pattern started on, let's see here, let's change this to red because that was started on 12/2 of 22. And my conclusion on that is the pattern ended on September 13th of 23. These two lines here. Okay. So that play took a good part of 194 bars or 194 trading days or 285 calendar days. Okay. So that's this giant pattern that you see here. This is what I pay attention to. Okay. That's what I pay attention to. So I will really lighten this up. Okay. So this is my existing pattern. And the reason I'm lightening this up is this is my existing pattern. I'm going to give it 30 days from when the pattern completed, which is right here to here, okay, where I have these lines marked out. So I will change this to, let's see, let's change it to white, okay, because white is pretty much a neutral color, okay. So I expect something to happen in terms of completing the cycle within 30 days, or at least give me some signs. So the immediate reaction for this pattern completion was day one, two, three. Right after it completed, 3 day, 3 bar drop. Consolidate, came back up, tested the XA level. Okay, XA is comprised of the XA leg within this pattern. Okay, so that's the harmonic side. So now what is happening again? It's coming back up to test the XA level once more on Friday. And then look what happened. It got sold off. Meanwhile, meanwhile, you have, let me do this. Meanwhile, you have leg 0 to 1. I know a lot of this is repeat of what I've said before, but I think this to repeat this in context of what I'm going to talk next is really crucial. Okay, 3, 4. I'm essentially drawing out swing highs and swing lows, but the swing highs and swing lows all tie into the market structure in terms of the legs. Okay. So when you see me do A, B, C, whatever, um, so be it, so C has a big range here. It could retrace down the price target 2 at 367, which is what I've been calling out for the last couple of weeks now. So that's not new. Okay, I know that's bearish, but that's not new. Again, I'm reading what I see within the chart. If you're a fundamental player, you could call BS on this. You're going to say this is going to continue to go up higher. So there are always two sides to a coin. Now, if the bears decide, you know what, we want to push this down to 1618 level, they could try, but I don't know if they'll make it. It would definitely fall way below the 200 moving average, which puts it right at about another 52% from from up here. Okay. All right. So interestingly enough, look where the XA leg is. 692. Price came up, touched 692 on Friday, and then got sold off very quickly. So this here is leg B. So A to B is a retracement leg. Okay. With this massive knife essentially on 10-3, it it concluded leg 5 to A. 5 to A, if you go back and look at any stock, MMAT, GTII, AMC, um, GNS, VIRI, especially VIRI, GMZP, TTO, I don't care. Go back and look at any of those stocks and you tell me, map this out. Swing from leg 5 to A and tell me if this leg does not give you the heebie jeebies, where it just goes bonkers between 40 to 50, sometimes even 100% retracement. Okay, so it's really important that that is my that is my TA. These are my structure. And if you don't agree with it, You don't have to be here. But if this makes sense to you, then I hope that you will spend time to understand it for yourself so that you can learn to do this as well instead of going off of someone's fundamental TA or someone else's TA, even mine. All right, so why there are a couple of things here why I think FNGR is quite interesting next week because Monday will be a very pivotal day for FNGR. And I know there's some positive um, earning report out right now, and that's great. That's great. Good news. That's amazing. But for me, the market is undecided right now for FNGR simply because of how Friday closed. And I drew this out in my TA for FNGR last night where I stated that it could go one of two ways on Monday. If price opens above the close, hit at least break the top of break the high of Friday's high, come down and test the low or the open or even the low here of Friday's low, come up and break above Friday's high, then yeah, I can see I can see FNGR coming back to the hop, which is 849, to retest the harmonic optimized point where it should have reversed down. Okay. Now, once that happens, if it breaks above 849, and please listen to me very carefully here because this is really crucial. If it breaks above 849, come down and test it, and then break back up above 849, then this is where we have a break in market structure. It invalidates for the time being this deep crab pattern, this harmonic deep crab pattern. It's not invalidating it forever. It's temporarily invalidating it until it needs until the market is in the overbought situation up here where it needs to retrace. Okay, we'll get into these oscillators in a second here, but let me finish my thought. So this point leads me into what I saw last night that was really interesting because I saw a new pattern that was forming. Where are you at? A new pattern that was forming that was very interesting. Which one do I use? Okay. All right. So this pattern is similar to the existing pattern that is on here right now, the deep crab. But now the ratio remains the same, but what it's doing is it's expanding the pattern further back in time. So what that means is now the retracement or the bullishness of this last point is now being pushed up to 1025. Okay. So a this is still a this is still very much a bearish pattern because once it hits the top where the price target is, it's going to have to retrace. So, you know, what is that silly cliche or saying that people always say, the bigger you are, the higher you are, the bigger you are, the harder you fall? That leads me to the second point. Yes, you will see price go to this potential price target of $10.25 based on this new harmonic pattern that is being generated in terms of the ratios. Potential, okay? Potential. So that means that the market sentiment could be shifting towards a more midterm bullish sentiment. That being said, if Monday opens or even Tuesday. So if Monday opens and it creates an inside bar here, Monday opens and it just basically consolidates, has an inside bar, then again, we have to wait and see what happens on Tuesday. If Tuesday opens and it just rocket above the high of Friday, then that tells me that the sentiment for FNGR has changed. And therefore, my TA for FNGR will change for the time being. Now, does that mean that price target 2 is no longer valid? Absolutely not. Because once it hits this new target up here, we then need to step back and say, hey, is it going to continue to go up? Or will we see this deeper, deeper retracement coming down to price target 2 right here? Okay, so I'm going to draw that to be red. Okay, so this is my thinking. This is how I TA. I'm not emotional about it. I'm logically looking at what the data is presented to me from what I can see. So if I were to wrap this up with a fib, we would see the extension somewhere around, see 1618. No, it's a little bit above 1618, so it's probably going to be like 1768, right about here. So that is that's not set in stone because we need to see what happens on Monday. Okay, so that is the 1 day chart. Going back to the 4 hour chart here, let's look at what's happened. Oh, you know what? Before we do that, let's look at the oscillators, okay, and how they pertain to the price action. As of right now, the highly modified version of the RSI is very bullish. It's sitting above the 50. I like that. Okay, that's good. As long as Monday comes around and it continues to trade upwards, then I am extremely bullish that we will see this scenario coming starting to unfold. Same here. This is our harmonic strength index. Right now it's pointing downwards, right? So you've got a little bit of contradiction between price going up and the oscillator pointing downward. I trust the oscillator versus price movement. If if I had to if I had to pick which one to trust, I don't trust price movement. I trust the oscillator. So we'll see what happens on Monday. Again, same as the scenario. The only way to validate my thinking is Monday comes around and we see the oscillator start to point back upwards because the oscillator is as real time as you can get when it comes to an oscillator for price movement. Okay, so that's the one. This is the complete view of my version, my understanding of TA for FNGR from the 1 day chart. Okay, so this is it. And once again, if you find this information useful and it makes sense to you, I encourage you to like and subscribe and share it. Let me know your thoughts. If you also do TA, I would love to hear from you. I would love to get comments from you in terms of what your thoughts are instead of regurgitating someone else's thoughts on, oh, financials are awesome, or oh, I think this is what it's going to do. No, don't think. Don't put any emotion into it. Show me the chart. Show me what you're thinking. I've walked you through my logical thinking of what I believe is going to happen with FNGR through charts. Show me your chart. Show me your video. Don't regurgitate what someone else is basically pumping out and telling you. Okay? I encourage you to do that. Now let's look at the 4-hour chart here because 4-hour chart will account uh, for the aftermarket on Friday. Same thing. It's essentially, you know what? Let me switch this out to another chart. Let's go here. It's a cleaner chart. Okay. Price one, two. Yeah, so even on the 4-hour chart, there's still a price target two that has not been met yet, at 422. So the breakout did happen here at a dollar at 508. I mean, is it not I mean, is it not interesting that price target one happens to be where the breakout was? Okay, so the breakout was for let me see where the breakout was for. I believe it was for hold on a second here, sorry guys. Yeah, here it is. The breakout was extremely close because I took the bottom of this triangle and went all the way to the top here, and it basically almost nailed it. Let me increase this, change this color to, I don't know, purple or something so you guys can see it. Okay, so look, price target nearly reached this triangle. So yeah, this breakout makes absolute sense from a TA perspective. But the market still wants this price target two to come into play. And then the harmonic optimized is at 370 down here. So I should revise this to this, and then my arrow down to this zone here somewhere. Okay. So this breakout to me tells me that it confirmed the breakout for this triangle. Okay, breakout for this triangle, as you can see here. Almost nailed it. And now what do we expect? Do we expect it to continue going up, or is there another price target left? Okay, so this is basically these are the things I look at. The 1 day, the 4-hour, the 1 hour. So on the 1 hour, it's quite interesting because there's also an ABCD pattern here on the 1 hour chart. So the 1 hour chart, and this was something I didn't get to go deep into last night because I was too tired. I had 5 other charts to chart. So here's an ABCD pattern. Okay, A, B, C, D pattern. Okay, pattern completed here. And now the market is either going to, so once the pattern completed, once any pattern completes within the from first to fifth trading trading bars, there should be a natural reaction to confirm this pattern. Okay, so very similar to the 1 day chart here. When this pattern completed, where are you? Oh, I'm sorry, that's the 4 hour. So when this 1 day chart completed, you had this massive drop within 3 days to confirm the existence, the validation of this pattern. Going back to the 1 hour chart, this immediate drop on the 13th dropped down to price target one. It's always been here. Okay. these price targets have always been here. If they've always been there, or they show up as potential price targets, similar to what I just demonstrated to you on the 1 day chart. Okay, so it's telling me that there's this potential pattern that's being evolved from this smaller deep craft pattern. Okay, so going back to the 1 hour, yes, look where it stopped, right exactly at price target one. That's not a coincidence to me. That is that is too precise to be a coincidence in terms of why did that drop come precisely down at 628 right here, price target one, and then retrace. So this retracement that you're seeing came down, touched it, came back up, and look where it stopped at, right here. You got a double top right here. This is what we call a double top. Double top is not good. Triple top's not good. Why? Because any TA will tell you that when you have a double top or a triple top, that means that it's meeting resistance. And what is that going to happen? It's going to get rejected at the high. I don't care if you're a fundamental trader. And if you're a fundamental trader, you would have to have some knowledge of technical analysis. You cannot argue against the fact that when you have a double top, that is a good thing, because it's not. It needs to break above the previous high, and the previous high was $7. And then on Friday, it had another high of $7, both days. $7 and $7. Okay. So I don't care how you TA, we all have a common language. We all agree on certain rules that are being respected by all traders. And when there's a double top, that is an indication of resistance. Twice now. Okay. Now, adding in my own flavor of TA, I now see that price, it was well above the 20 period moving average. So that means that the last 20 trading candles, or 20 hours of trading, price has moved above the 20 period moving average, and that was about 5%. So what does that mean? It means that as price move further away, I'm expecting another retracement. So come Monday, if price doesn't break above $7, if price doesn't gap above $7, which it needs to, because remember I mentioned that on the day chart, it needs to open up above the close of Friday and continue trading upwards to lock in that trend upwards. If it opens below or continues to trade below Friday's close, then the second scenario, the bear scenario, kicks in, and that's going to start to retrace down. Really hope that makes sense. I mean, that is fundamental TA, all right? Reading charts, understanding candlestick patterns. Okay, those are just the fundamental things that all traders need to be able to recognize. Okay, so come Monday, price doesn't open up above $7, 701, I don't care. Whatever. Above 7, and continue to trade above that, then yeah, you're going to see a retracement down to price target 2 is the next price target, which is at $5.94. Stair stepping back down. Okay, $5.94. I'm going to leave these on here so that we can go back and take a look at them in the future. And then from there, it needs to basically decide which direction the market wants to take FNGR. Okay, now these fundamental plays in terms of good news, the shelf life is only, in my opinion, sometimes 10 minutes, sometimes 20 minutes, sometimes 1 day, sometimes not at all. Sometimes it just, buy the rumor and sell the news. And maybe that was what was happening here. But one thing I can trust is the TA, not the good news. Good news sometimes turns out to be bad for the stock price. All right, guys. So that is my TA in a nutshell. I see a potential extension of this deep crab to push the price higher up here at $10.25. Or if price does not open above $7 on Monday and continue trading upwards, and if we see a gap down, then we can expect the first price target to be based on this 1 hour chart to be $5.94. I'm looking at this, I'm leaning towards 5 to A right here. So 0 to 1, 1 to 2, 2 to 3, 3 down to 4. Okay, and then 4 up to 5. 5 now needs to retrace. Remember we talked about leg 5 to A is always gut wrenching. And that's going to put it right at 618, which is, let's see, 786. 618 would bounce would be $6.09. That would be 618. Or 768 would be 7 would be right here at $5.87, and I already have that marked down. Okay, so this to me looks like it's going to be leg A on the 1 hour chart. This is leg A. Okay, so that will be the retracement leg A right here. Change that to red because it's, well, let's do orange. It's easier to read. Okay, so 5 to A. Possibly within this range. 610 to 594 is the retracement. Okay, so you've got the long-term price action, you've got the midterm 4 hour, and then you've got the short-term 1 day price action. 5 to A, this leg right here, somewhere between 628. I'm sorry, not 628. 611, which is the 618 retracement, or down to the 768 retracement within this range right here. Okay, so I hope that helps. If you enjoy this information, please like, subscribe the video, share it. Once again, this is not financial advice. I am not giving you financial advice, nor am I a financial advisor. So please treat this as educational and entertainment purposes only. Vincent Wynn here for Tipline. Have a great rest of your weekend, guys, and I will see you on Monday.